Hi, my name's Greville Pabst from WBP Property Group. Today, I'm going to talk about buying property off the plan. Firstly, is the purchase off the plan for home occupation or is it for investment purposes? The advantage of buying off the plan for home occupation is the tax depreciation allowances, the stamp duty savings, and of course you have an opportunity to have input into the design and layout of that particular apartment. Buying off the plan for home occupation is often a lifestyle decision, but quite often this comes at a cost. In my experience, cost does not equal value. So the price that you have paid in the contract for an off the plan purchase might not necessarily mean the property's current market value. Remembering that it can often take 18 months before the project is completed. Will the property value up at that time at contract price? From the research that I've undertaken, up to 45% of all off the plan sales have failed to value up at contract price. Let me walk you through an example. The developer will set the off the plan price, let's say it's $500,000, and that price is determined by the developer's cost of the land plus the construction and development costs plus any marketing costs and sometimes commissions that are included in the sale price. That's not necessarily market value. Cost does not equal value. What this means is that quite often you can spend tens of thousands of dollars more than what the property is actually worth. And it can take you many years to recover from that investment decision. When considering investments of this type, do some research. It's really important. Look at the data, look at some resale evidence of similar apartments that have resold by that developer. Ask the developer for evidence of the performance of those assets. Because if a property hasn't performed in the past as an investment, it's unlikely to start to perform just because you own it. Point 2 is forget about all the financial wizardry. A property must stand and perform on its own. Those depreciation allowances, the stamp duty savings are generally not afforded to the next buyer. So make sure a property performs and stands alone without the financial wizardry. Point 3, remember, capital growth comes out of the land. So make sure when you're investing in real estate is to select highly valuable land. And if it's a block of flats or an off the plan purchase, make sure that your share of that highly valuable land is high. So what I mean by that is to buy in lower density developments. Generally, I would recommend in developments of less than 25 apartments. Point 4 is make sure the property has an element of scarcity. Property is no different to other asset classes, whether that be art, collectible cars, stamps or coins. It is scarcity that drives value. Point number 5, don't be distracted by the promise of dreams, the glossy brochures, the accountant's projections. Work with what's real. How has the property performed in the past? What is its growth history? If a property hasn't performed in the past, it's unlikely to perform just because you own it. And finally, use emotions when you buy property. Get emotional about the selection. Just don't get emotional about the price. At WBP, we have some 30 years experience in property valuation and strategic property advice. We conduct some 100,000 valuations every year. This puts WBP in a unique position to advise our clients when buying investment property for both owner-occupation or investment purposes. To discuss your unique situation with a WBP property advisor, please contact us on the number below.